All right, let's find out what's going to happen for the global economy this week. What investors should be looking out. Looking ahead, the economic calendar is packed. May 13, markets will focus on the NFIB Business Optimism Index, followed by inflation rates, API's weekly report on U.S. crude inventories. The MBA mortgage applications release, that's scheduled for, I think, May 14th, along with EIA's updates on oil stockpiles. May 15 brings a flurry of key data, including retail sales. We're getting retail sales. That April inflation, that's for Wednesday, that's for the U.S. Producer PPI, Producer Price Index, we'll get that on Thursday. Then retail sales, that's another data investors will be looking out for to find out the state of the U.S. consumer. So that will definitely drive sentiments in the market. The NAHB Housing Market Index and the latest initial jobless claims, I think that's coming up for May 16. Building permits and housing starts are due alongside import and export prices, preliminary Michigan consumer sentiment reading. So a lot for investors to look out for, and definitely we know markets will react to all of that. Also, we see Japanese Prime Minister Shigeru Ishiba stated today that Japan will not accept any trade agreement with the United States that fails to address the tariffs imposed on automobile imports. The U.S. has imposed about 25% tariff on imported automobiles, a move that has significantly impacted Japan, where vehicles account for the majority of their exports to the U.S. Chinese Consumer Price Index inflation, that eased for a third straight month in April, while producer inflation fell by its sharpest pace in 6 months as the country grappled with a bitter trade war with the United States. CPI inflation, that shrank by 0.1% year-on-year in April, according to government data over the weekend, in line with expectations. And after a 0.1% decline in the prior month, CPI rose by 0.1% month to month. Then Saudi Arabia Oil Company, that's also known as Saudi Aramco, said that its net profit for the first quarter, that fell to $26.01 billion, down from $27.27 billion in the previous year. Despite the drop, the figures exceeded analyst expectations of $25.745 billion, according to a poll by Visible Alpha. The oil giant attributed the decline in profits to weaker oil prices, which have been affected by global economic uncertainty, trade tensions, and the threat of oversupply as OPEC Plus ramps up production. Then we see President Donald Trump announce that he would sign an executive order today in the morning to slash U.S. prescription drug prices by aligning them with the lowest prices paid globally. Posting on Truth Social, Trump criticized pharmaceutical companies for decades of inflated pricing. He said the U.S. has long paid for more of prescription medicines than peer countries, with some treatment costing 5 to 10 times more, despite being manufactured by the same company in the same facility. So we'll be looking out for that, definitely. All right, to our conversation now, conciliatory tone at the U.S.-China trade talks this weekend. We got that report today, 90-day pause, and definitely negotiations are looking quite good, according to those that were present, with those negotiations. Let's talk to Isaac Marshall now. He's an investor at TLG Capital. Hello, Isaac.
How's it going, man?
Fantastic.
Great to see you again.
It's great to see you too, Isaac. So, yeah, we did get that breaking news this morning. We have an agreement at this point between the U.S. and China. They've agreed to pause for about 90 days, this trade war. But is this what we're looking for? Because we kept hearing, from the U.S. that it's productive. The meetings are so productive. It's good. It's looking good between U.S. and China. How are you seeing it?
I think it's funny because with at least an eye of the storm that we've entered in, the eye of a hurricane is the part of the hurricane where there's total calm even though there's storm all around it. And I think to some degree that's where we've landed. And I think it's a useful reminder to myself as well as other investors that I think to some degree those who chose to look through the tumult and the noise, watch the fundamentals, and heck, even pick up the companies that they've been looking at for some time when they sold off and became quite cheap. At least so far, seem to be those who've been rewarded. We're reminded by now that he's in retirement, Buffett's adage that the cash flows are king. Ultimately, we should always look to the cash flows of companies, and of course, the tariff news impacts long-term cash flows. But I guess what I've seen with this latest deal that's announced, I think the administration has made it very, very clear that, contrary to some early thinking, because early on people thought that the reason why tariffs were being raised is that, okay, we're going to put in tariffs and we're going to cut taxes, and that tariffs are going to be means to government revenue. It's evident that that's not the case, but actually the announcement of tariffs was basically a fairly aggressive way to kick off a renegotiation of trade terms with all of U.S. trading partners. And so I think in that context, I'm fairly confident that there's at very least a lot of concern for market reaction. And there's a concern to make sure that deals that are ultimately struck are not going to be disastrous for the U.S. economy, at least in the long run. So I think, does volatility continue? Probably. Should it negatively impact your view on U.S. companies? Not necessarily. I think where we kind of land on that.
Right. And talking about a disaster for the economies there, do you think the worst case trade scenarios, you think that they're not going to come to pass, with these talks we've seen so far?
Yeah, exactly, Lottie. I think what we've really seen with both this settlement, but frankly, I think the moment that the administration announced that they were pausing all tariffs except China, when they made this announcement sometime back, where they said, okay, listen, everybody who's come to the table, we're now going to pause the tariffs and give adequate time in order to actually set the right terms in place. I think, to me, that was a really big shift in the tone and the market perception. I mean, the U.S. equities are up for the month. I think you'll probably see a continued rally today. Oil prices are more or less flat after a period of decline, because I think folks are beginning to realize, okay, wait a second, this is not like a real nightmare tariff situation. Rather, the bold announcement was used as leverage to negotiate terms. And I think, the reason that has implications on volatility is because I think the market has entered a very reacting character at the moment. And so for that reason, I think it's hard to tell what a bottom looks like or where we'll end up in the next 6 months. But I think long run, economically, it seems clear that the administration is not going to make, at least on the tariff front, any totally radical changes. It just seems like it's used to kick off negotiations and settle somewhere reasonable.
Right. And looking at, most of the markets in this month, we've seen the U.S. Stocks. They've recovered quite a lot, with most of the conversations we're hearing from the U.S. and China. We've seen Bitcoin. That's hit a new, it's not a high, but, a high not seen in a while. Hitting about $104,000, and all of that, riding on, optimism we're seeing, coming out from these conversations. But we know that adage, sell in May and go away. Is it not going to happen this May?
Look, honestly, trying to predict the next couple months is so hard. I think even if my full-time job were just monitoring and doing some AI sentiment analysis of what different people have said in different speeches, I don't think you'd get a very accurate prediction about where things are going to end up in the next couple months. And I honestly, I think that if anything, the current market cycle is proving to folks that, look, like, you're not going to be rewarded for trying to trade on the news. And I don't think that's ever been the case, to be honest. I don't think that's ever been a great way to invest or make money. I think the best investors will look through the current noise, try and understand that net, you probably end up with a slightly lower tax regime. Net, you probably end up with slightly higher tariffs. Net, inflation may be marginally higher, but I don't know. I think, to me, where it looks right now is that, if anything, the results are probably going to be a lot more moderate than we thought 1 month back.
All right, we'll definitely keep tracking. Maybe this might be a stay in May kind of month or year. But thank you so much. Always great having you. A very good friend, Isaac Marshall, investor
Pleasure.
at TLG Capital. Thank you for coming on today.
Take care, man. Always enjoy, Lottie. Thank you.
Fantastic. All right, so that's Business Morning today. That's how the local markets we track and the economy is looking. I will definitely give you an update at 1 p.m. on what's playing out with most of the markets that we track. I'll be back for that. Now, we know we have John McWash. She's in Abidjan, and she'll be covering the Africa CEO Forum 2025 right there. She'll give us updates on what's playing out. Thank you for watching. I'm Ladi Williams. Bye for now.